So this past week had some pretty strong selling pressure. We had weakness in the overall market, weakness in the strong commodity sectors, weakness in the weak technology sectors. Is there more weakness to come? Well, that's what we're going to analyze and figure out where the markets are likely to go. All right, welcome to this week's Market Minutes video. I've got on screen now the chart of the S&P 500, which shows some pretty strong selling pressure this week and last week, and it sets up for a potential major move to the downside, and I'll explain what to look for. So the first thing that we had, of course, is the upward trend line that was broken there, but that was from a new high. We've now made a falling top, and we are rolling over from a falling top. If we get down below that 420 level, I think we could see some more substantial weakness, perhaps bringing us down into this range. So there's some real risk in the stock market right now. Of course, the market worried about rising interest rates as central banks work to combat inflation. Now, we are a little oversold. If we look at the short-term chart, I'm going to look at the 1-month 60-minute chart of the S&P. You can see that we had that really sharp selling pressure the last couple of days. And that means the market's a little oversold. So it wouldn't surprise me at all if we get a little bounce back from this. But unless we can start to build rising bottoms, I worry that we're ultimately going to break down through this floor and head lower. So I want you to be fairly cautious with stocks overall. Now, we can look at the Nasdaq 100. It's a very similar situation. Of course, Nasdaq is more technology heavy. And you see basically the same chart pattern there. I don't think we need to go over that one. The small caps, IWM, not showing as much weakness, but still testing support. And there you have that support level. You could even go a little lower, perhaps the 190 level. But we've got falling tops. That's an indication that the sellers are in control. And if we break down through that, again, probably heading down toward that level, you're looking at a move from 195 down to 155. It's pretty substantial sell-off potential. Now, we have had strong sectors of the market. Of course, the reason the market has been moving lower is inflation, and inflation has been good for commodities. So let's take a look at some of those commodity sectors, starting off with gold. And GLD is the symbol for gold itself. You can also look at gold stocks, mining stocks. But there we see also some weakness this week. If we look at the intraday chart, the 1-month 60-minute, you can see we've broken this little downward move and we are now approaching support. The difference here is that the momentum, long-term momentum in gold is still up. And so you have to view these weak times, as we've had a couple of days of weakness, as a potential opportunity to buy things on sale. We don't want to buy things on sale in a downward trend. So when we look at technology, for example, that group is in a downward trend. We don't want to be buying weakness in that. It's like trying to catch a falling knife. But in a strong sector, weakness that brings the market back to areas of support usually comes with a bounce. So one of the things I want you to watch for in the weeks ahead is a move down into support, and if it can then break the downward trend line on the intraday chart, and again, I'm looking at a 30-day, 60-minute chart here. If we can break the downward trend, kind of like what happened here, you can get little rallies that are tradable for a swing trader. Well, let's go outside of precious metals and go to the materials sector, which broke out a couple of months ago. So we had this breakthrough resistance. We've been moving up nicely. It also caught some selling pressure this week. I love this pattern because what it's going to do is probably set up for a buy point. We could get another week or two of weakness. And then if we break the downward move, you get an opportunity to buy. Notice that the sentiment stock score is still strong. That's because the momentum here is up. Now, if I go to the 1-month chart, and again, make it a 60-minute chart, what you want to watch for is a break of the pullback. So if we can pull back a little bit, maybe a couple more days or even longer, but then break that pullback on the intraday chart, that's an opportunity to be a buyer of what is a strong sector because commodities, of course, benefit from inflation. All right, let's jump around a little more and take a look at some sectors that I think could generate some opportunity. And the first one I want to bring up is JETS, J-E-T-S. Now, JETS is the airlines, basically the mostly American airlines, but it is global airlines. And you can see that there's a downward trend line here. This is the weekly chart. And we're starting to break through that. Now, of course, as COVID restrictions are lifted, people are flying again, and I think we could see a rally in travel stocks and specifically airlines. Now, there's another ETF to look at. The symbol is TRYP, and TRYP represents airlines, hotels, cruise lines. It's also just starting to test its downward trend line. This has not been trading very long. That's why the chart doesn't show a lot of history. But if we can build that rising bottom and break this downward trend line, you could see opportunities in cruise lines and airlines and that sort of thing. We could actually look at a chart of a cruise line. I'll just pull up Carnival. And again, you see this pattern where the bottoms are not falling as quickly as the tops. And that's a sign that the sellers are losing momentum. So watch for a break to the upside as a sign that it's starting to turn around. All right, let's take a look at the Canadian markets now. T.XIU is the TSX 60. Had a little bit of weakness this week, but it's still inside this general pattern of optimism. And so although that weakness is not great to have, what it does is potentially set up buying opportunities. You can see you get little periods of weakness, you break the weakness, and you go for a nice run. A little period of weakness, break the weakness, go for a 4 or 5 week run higher. So that's what I want you to watch for on the Canadian market, because of course the Canadian market has lots of commodity stocks and it can really benefit from the weakness, which puts things on sale, but that have long-term upward momentum. Okay, now let's take a look at oil. USO is your oil ETF. You can see good, strong upward momentum here. We've been going sideways for the last couple of months. If it can break out of this pattern, then it can go higher. And it's easier to see if we look at, say, a 6-month daily chart. You can see the pattern that's building. This is called a pennant pattern. And if we can break out from the pointy tip of the pennant, then it'll be time to make short-term trades in the oil stocks. Now, another ETF that's nice to watch is XEG on the Toronto Exchange. Of course, lots of Canadian oil companies. And there you can see that good upward momentum. But this is a sign that we're going to get a pullback. I think we could see the oil sector, pull back for a week or two, come back to the trend line, bounce, and that'll be a buying opportunity to buy stocks in a strong sector that go on sale. And that's the theme here. Commodity sectors have that strong upward momentum. They're showing a little bit of weakness, some profit taking, some concern in general about the stock market. If they pull back enough and then break their pullbacks, there's an opportunity. All right, well, let's take a little quick look at some of the currencies, and we'll start with the cryptocurrencies. GBTC really having a hard time getting going. It bounced off support, but it hasn't been building any momentum, and I'm starting to be concerned that we're going to test this support level, and that could lead to lower prices. So if we break down from this falling top through this support level, I think Bitcoin going down to that level. So watch out for that. US dollar, UUP is the symbol for the US dollar. And with the potential for rising rates, people flight to quality, people chasing the US dollar higher, it is going parabolic. I think it could go a little bit more to the upside until it hits some resistance zones, and then probably will pull back to that upward trend line. I think it's a little bit of craziness with people rushing into selling the bond market, making interest rates go higher. This chart represents rising interest rates, but interest rates have gone up a little too quickly. You can see it's gone parabolic, and when you go parabolic, you usually get a pullback to the trend line. And I think maybe not next week, but in the next few weeks, you'll see that. I think interest rates will pull back a little bit as fears about rising interest rates cool off, as the emotion comes out of the market. Well, what do you think? Where do you think the opportunities are in the market? Do you like the travel stocks? Do you think that's an area? Leave a comment in the comment section on where you think the opportunities are in this market. And if you enjoyed this video, click on the like button, subscribe to the channel, and most importantly, trade well.